Hey y'all, Zach McDonald, your real estate agent with Real Property Associates, and today we just hit 7%, actually more than 7% on mortgage rates for the first time in over 20 years. And that's a big announcement here today, big news. Mortgage rates on Mortgage News Daily, 7.08% this morning. That's big time, especially since rates have changed over 0.21, almost 0.25% overnight. And rates have just been doing this over the last month. About a month and a half ago, we saw a little blip, and I even saw just below 5%. And I was like, what? Rates have been going down a little bit, and now they've been shot up. And so right now, rates are super volatile. The stock market's been super volatile. Everything's super volatile right now. And there's a lot of fear, right, in the market. The fear index is nearing a high, a recent high at least. And we've got all this economic uncertainty. We've got now home prices going down. There's another recent article about how the Seattle area has seen the biggest drops in prices around the country since things have started to slow down. And as I'm looking at this, I'm thinking about interest rates, and I've made some videos about different thoughts about mortgage rates and things like that here over the past few months as they've been going up. But just a quick snapshot here historically, 1981 was the worst year we've seen for mortgage rates, well over 15%. We were in this 13 to 15% realm for a really long time for mortgage rates, and then they started to go down, and we got into the upper 9s, 8s, 7s, kind of in the 90s, and we finally broke that 7% mark. As we look back, it was the early 2000s. As we look back historically, rates are in the upper 7s across the board since 1971 when they were tracking this, when Freddie Mac started tracking this data. And as we're looking at where we're at now, it's a little bit scary to see rates jumping up into the 7s. It's scary to hear things like, we haven't seen rates this high in 20 years, but up until 20 years ago, this would have been an amazing rate. So again, perspective, but that doesn't change the fact that houses were way cheaper to buy in 2000 than they are now, and that the amount of impact on those mortgages is dramatic with the higher rates. So again, recently we experienced the lowest rates we've ever seen. 2021 was like the year of low rates, and we saw rates in the 2s, which was crazy. I refinanced when rates were in the low 3s and thought, man, if I can get a low 3 rate, which at the time was an all-time low, if I can do that, I'm gonna be really, really happy. And so I refinanced, and then they just kept getting better. So I have many clients that have even better rates, but they've got a better rate, and at this point, a higher price in some cases than some people right now. So prices have been coming down as a response to rates, at least in the Seattle area and a lot of other areas like San Jose, et cetera, with higher price points. But I think if we're looking at things objectively and we look at historical data, when we get into recessions, and we're nearing one, I think we're already in one arguably, but we're nearing one according to the government, you're going to see rates going up. And when we get to the official recession, that's when rates start to flatten out and even go down, and especially coming out of a recession, right? Trying to incentivize spending, get the economy moving again. And so right now we're in this climate of rates going up, more fear, more uncertainty about the market. But once we kind of have the certainty of, well, it's just not good, which let's just be real, that's where we're at right now, that's when we'll start to see rates going down. And that might be 6 months to a year. I know Fannie Mae is saying they're thinking Q3 of 2023 is when we'll see rates start to go back down again, or have rates in the 4s again. So again, nobody really has a crystal ball, and I wish I did. I wish I could tell you exactly how this was all going to play out. But what I do know is we're going to see rates in this higher state for a little while. They may go up a little bit more. They may go down a little bit. They're super volatile. But what I do know is that rates are going to go back down at some point, and when they do, the housing market's going to pick back up. If we look at housing prices in a recession or near a recession, typically they are relatively stagnant remain flat. But more recent memory, 2008, obviously catastrophic. We can't really attribute that to rates. That is mainly bad mortgage practices, and ultimately that crash was the housing market's fault, right? The stock market and the housing market. We're in a completely different environment right now. I've made lots of videos on that, so jump onto the channel if you want to see some of those. But as we're talking about what's going to happen here, housing prices have obviously gone down a little bit and dipped, but historically speaking, housing prices don't have a catastrophic drop during recessions, unless of course it's the housing market's fault. So right now, again, there's a lot of fear in the market. There's higher interest rates, obviously, which affects the affordability piece. But I suspect once we start to see rates coming down again, and especially if we don't see a massive influx of more inventory, which we're really not seeing right now. It felt like it originally, but now that things have kind of leveled off the past couple months, we're not seeing a massive flood of houses on the market. So I would suspect we're going to remain a little bit more stable here unless that changes. And then once interest rates go down, we're going to start to see the housing market pick back up again. Thanks so much for watching this video as we look at mortgage rates reaching a high here over the past 20 years and how it's particularly impacted places like Seattle, where prices were at record highs and really the highest prices across the country. And now we're starting to see those effects as the rates have come up. So I think, again, I wouldn't be concerned in the long run, but I think here in the short run, we've definitely got our work cut out for us. I think we're going to have things be a little bit slower here for a while until rates start to go down. I think buyer activity has definitely slowed down. I think seller activity has slowed down too. That's just what the data is showing us. So make sure if you want to subscribe to the channel here to follow along with the weekly Seattle real estate market watches, and then also those monthly Seattle real estate market updates. Those are kind of the big videos that I'm putting out regularly here on the channel. So I think those would be really valuable for you if you want to continue to follow along with the market and how it's changing and adapting. And of course, if you want to talk real estate, you want to talk about your situation, I'm always here to be a resource for you.